This is Morning Stock Watch with the weekly market report for the week ending August 8th, 2020. This report includes the broad market sectors, Netflix, AMD, and Chegg. Starting with the S&P 500 ETF, SPY, weekly closing price of $334.57, up about 2.5% on the week. First, looking at the weekly chart, we can see that it is already ridiculously overextended, still may have more room to the upside. Watching the all-time highs near 340, price is currently at $334.57. Not much lower than the all-time highs. Most likely, we'll see another attempt at the all-time highs before everything is said and done for anything below 323. Price continues to remain in an up channel, making a lot of contact with the support and resistance over the past 21 weeks. This proves to be a very strong channel, with many traders watching support to give way. This week's candle is bullish on slightly lower volume than last week and considerably lower volume than the week before that. It's not the strongest bullish move up and hence in lack of institutional participation, which makes us more confident in further price direction to the upside. On the daily chart, attention to this area. The candle bottoms are around 335.50. These few candles present a bit of resistance for price to get above. If for whatever reason the price can get above and remain in this little island of candles, we'd likely see the market go higher. On the side of caution, the indicators continue to point to the notion that something is building up for a large move in the market, particularly to the downside. We have some slight bearish divergence in RSI, as we can see here, and on MACD. Attention to the MACD indicator. We see that the histogram is getting more quiet by the day. Notice a decrease in the histogram, and observe this in other charts if you use MACD. For now, the market is bullish until it's not, simply said. Looking at the 11 market sector ETFs, simply looking at the weekly candles in comparison with the S&P. This week, tech again led the market, as well as being at all-time highs. We can see that with the movement of NASDAQ and QQQ. The Russell 2000 IWM also made a nice move up and closed above the critical 152 price point, but on moderate volume. Consumer staples and consumer discretionary also very strong in the recent weeks. Taking a closer look at XLP, for example, is on par with the market, no RSI divergences, but there is some inconsistencies with the last several candles. Large amounts of volume, but little move up. Also, MACD has that fizzle outlook. This tends to happen just before a big move. This looks just like the market. Now let's look a bit closer and see where the S&P could actually be going. As always, there's two sides to every trade, and the idea is to be on the good side of the trade more times than not, with each trade having limited risk. With that said, let's see where this thing can go. From what we know so far, we see that from the SPY, the market can easily continue higher or lower from its current position. Looking at the weekly SPY chart alone, it gives us the impression that it can attempt at all-time highs. A lot of people want that to happen, and there's also a lot of people that want the market to come down because it's overextended, it's too expensive, the economy is in bad shape, etc. If we do continue higher, it would be favorable to at least see price remain above the support line with continued moderate volume. Price this week made it to 334.50, and we suspect all-time highs is in the works. On the flip side, what if price doesn't make it higher from here and all these divergences start to play out? Well, we have plenty of support here, but if that breaks, that will be the first time in a long time, and likely we'll see something around 300 eventually. Next, we have this Netflix weekly close of 494.73, up about 1.25%. Any patterns that stick out on this weekly chart? Yeah, this up channel, which seems to be valid because of the large amount of candles that open and close right at support and resistance, like right here and here. A few weeks ago, price made an 18% move to the upside and out of the channel on weak volume, only to revisit the channel with a large red candle nearly the same size but with twice as much volume. They definitely didn't want Netflix where it was for the time being. Just to add, the next 3 weeks we have 2 spinning tops, and this week is sort of a hybrid candle, somewhere between a spinning top and an inverted hammer on low volume. Not the most decisive. While Netflix is a very popular stock and is predicted by some to go up to $1,000 here in the future, on the monthly chart, price also looks overextended with some strong negative divergence on the monthly chart. It wouldn't take much for a sharp drop in price in the near future. If for whatever reason price can't make it back to above 520, we could see price drop back to the 470 range, attempting to make it back into the channel, and enough of that would cause it to revisit 450. and possibly start to trip down to 385 to 400. It's a definite buy in that range of 385 to 400. Next we have is AMD, the highest traded stock this week, over $50. Weekly close of 84.85, up 8% this week and almost up 50% over the past 3 weeks. The weekly chart shows 3 straight super green candles, 3 green soldiers to nearly 90. Extremely bullish pattern, however. We're getting close to a point of a pullback. We do have the inevitable negative divergence on RSI and very large gap between the signal line and the MACD line on the MACD indicator. Decreasing volume as price goes higher. And while we're on volume, the volume is higher for these 3 candles, but it's not extremely high in relation to the rest of the chart. So it's a moderate chance that price will not be able to hold for the present time. All this is telling us is that traders are getting slightly less interested in a higher price for AMD for the current moment. That sentiment can change at any time, especially if the market comes down hard or gets another burst of energy to the upside. For now, we could see as high as 90, maybe an ultimate target of 100. AMD is at all-time high, so it's a little tougher to predict on the upside. Downside targets retest of the bullish wedge at around lower 60s. This is a buy, or 70 around this gap, which is also a good area to get in, but with a lower position size. And last we have Chegg, CHGG, weekly close of 86.98, up 8% this week and up 200% since the lows of this year. Another stock that is increasingly becoming more of a heavily traded stock, Chegg, which is a leading student tutoring service that has been extremely innovative over the past several years. Not too long ago, this was a $15 stock. Now it's at $87. Not going to spend too much time on this one. It's a great idea, and they execute their services very well. Looking at a monthly chart, we see very high volume on these very large candles, however, with some negative divergence. The volume present tells us that this is the beginning of a much higher price in the future, but probably not before a bit of a pullback this year. 65.50 looks reasonable, even if price goes a bit lower. That's right at the top of this trend line, coming off the top of these peaks. Wouldn't necessarily get in now for the simple fact that it's oversold on the month with bearish divergence and very extended, but whether you get in now or wait for a pullback, Chegg appears to be a solid and promising investment for the future. If you found this report useful in any way, please give a like and subscribe. Thanks for watching. Hope to see you next week for another weekly report.